Well, let's get into our main discussion because the Bank of Jamaica recently announced that they are holding the policy rate steady at 5.75%. And this did surprise quite a few people, given that inflation is pretty low right now. We're at 1.2%. And so there was some thought that interest rates would be falling some more. But here to discuss further is the BOJ Governor, Richard Biles. Welcome back to Taking Stock, Governor.
Good evening, Khalila. Happy to be here.
It's been a while since we've had you on, so I'm very happy to have you on. First time since the election as well. The last time we spoke, interest rates were still at 7%. They've now come down to 5.75%. And like I mentioned in the introduction, the Bank of Jamaica, the Board of Governors, including yourself, have decided to hold it there for now. So tell us what went into that decision.
Well, the inflation rate that we have experienced in the last 2 months, and particularly last month, really is abnormal at 1.2%. I don't think, certainly in my time of paying attention to interest rates, we haven't seen inflation that low. So very low inflation. However, it's transitory. A lot of it has to do with the recovery in the agricultural sector. So recall that last year we had Hurricane Beryl, dramatic shortage of agricultural products, and prices went through the roof. We've had a good recovery from agriculture since then. And so what we are seeing now is a deceleration in agricultural prices, quite dramatic. And because agricultural products have a pretty heavy weight in the CPI basket, it has pulled inflation down to 1.2%. But as soon as that period of very high inflation last year comes off, as soon as we pass through it, what we will find is that inflation ticks back up into the 4 to 6% corridor. Right? So the deflationary effect of agricultural prices will soon wear off. And indeed, we expect that by March of next year, inflation will be in the 4 to 6% corridor. Towards the end of this year, it may still be about 3.5, 4, and then it will go into the corridor. The other reason that inflation is abnormally low right now is because of the reduction in GCT on electricity rates. This is a decision taken by the government earlier in the year and which became effective in about May or June of this year. And what that has done again is pull down the cost of electricity, which is a significant contributor also to the CPI basket. So those two phenomena have created this 1.2%. As we roll around to next year, April, May, we'll see that electricity downward pull wear off. And again, we'll see that pushes inflation back into the 4 to 6% corridor. If we want to really look seriously at inflation, we need to pay some attention to core inflation. So the 1.2 is what we call headline inflation. And that is the inflation of all the goods and services in the CPI basket.
All right, let me cut you right there. We're going to come to core inflation in a minute because you've already explained a lot. And I just want to kind of summarize for our viewers. So what you're explaining is that when you look at inflation, when you measure inflation, you're measuring it relative to another period. So it's not something that happens, oh, prices went up so-and-so this month. It's compared to the same period last year.
Correct.
And the same period last year would have been Hurricane Beryl, which was an unusual occurrence.
Correct.
Okay, so now we come to core inflation. And in the report, you guys are saying that core inflation was about where you want it to be. So go ahead and explain the difference between headline and core inflation.
Right. So core inflation is headline inflation minus agricultural food and energy. So most of our energy is imported. It's mostly LNG and heavy fuel oil.
But
So when
aren't
you
those
think
the two major things anyway that people spend on food products and transport?
they are a fair amount in the CPI basket, but they are not the entire thing. I mean, they're not even half of the cost of the CPI basket.
Okay.
So core inflation is 4.3%. And what that is saying to us is that inflation in the economy itself, right, is still fairly high, meaning it's in our 4 to 6% corridor. And so we have to pay attention to that. The 1.2 is going to wear off, but the 4.2, 4.3, we have to keep a keen eye on that.
You know, when I speak to my friends in the international press or anywhere outside Jamaica, and I tell them, well, our target range for inflation is 4 to 6%. Ideally, you want it around 5%. A lot of people ask me why. They said that that seems high. And I see a question here in the chat as well, Orville, asking, what is the rationale behind the 4 to 6%? Why not 1 to 2%? Why do you want inflation to be at that level?
Yeah, this is not a parameter that we set. This is a parameter that the government of Jamaica sets. So they decide that given the state of the economy, given the state of the amount of debt we have, the amount of growth we want, that inflation at 4 to 6% is the most appropriate for them at this time. So that is a parameter that is set by the government of Jamaica.
But why? Because most people, when we hear low inflation, we heard 1.2%, we say, yay, that's something to be celebrated. But from the BOJ level, you're saying, no, that's too low. You want it to be higher. Why?
Because the government has set 4 to 6 as a target, and we are executing on the government's decision.
So you don't have an idea as to why the government has set that as the
Yes,
target? Because it's
yes,
been that target for some years now.
correct. And it perhaps has to do with the amount of debt that we have, because remember, debt to GDP is measured in nominal terms. That means what is the nominal GDP to the amount of debt. So if the nominal GDP is higher because of inflation, then the debt to GDP is lower. And that, I'm sure, would be one of the calculations in their decision, not necessarily the only one.
So there could come a point when that will not be the target,
Correct.
that may be reduced.
Correct. And you'll see that across the world, that economies that have a longer history of low debt to GDP, which we are entering into that phase soon, you'll find that they will set targets that are lower in inflation.
I see a comment here from, who is it from? Sheldon. Sheldon says, but I thought the BOJ was independent from the government.
Not entirely, and this is one of the parameters that the government sets.
All right.
We are independent in the sense that we execute on that decision. Right? So whether it's stay at 5.75, or they come down to 5.5, that's our decision. But the corridor of 4 to 6 is a policy decision made by the government.
So you've described the current level of inflation as being largely temporary. So compared to Beryl, we also have the impact of the reduction in GCT, and you believe that this is going to change by March or so. But what gives you confidence that these are truly transient, and what could cause these numbers to reverse?
Yeah, I mean, in life, nothing is certain, but we know that the principal reason why inflation is so low is because agricultural inflation was so high last year. And we know exactly how long that high inflation lasted last year. So we can, with some amount of certainty, predict when that low inflation will start to rise again, because the base year of last year is wearing off. And the same thing with the GCT on electricity. Once we have done a whole year, 12 months, and we start to measure against a base year that already has a lower GCT rate in it, we'll see that inflation pops up a little bit again.
So, what are some of the factors that could potentially impact inflation over the next 12 to 24 months, both domestically and externally?
Good question. I mean, this uncertain international world that we are in makes projecting inflation a little scary sometimes. You can have supply chain problems, you can have wars that break out, you can have tariffs that go through the roof. So that uncertainty internationally is a principal source of uncertainty in our inflation too, because we import so much.
And it makes me wonder how much of a role does global uncertainty play in the BOJ's decision making? Because you have these external shocks, you have trade policy, supply chain issues, US-China relations, war in Ukraine, all kinds of things happening. The Fed making their decision to finally
Yeah,
start cutting rates as well. How much
right.
does that influence your decision making here?
Yeah. Well, we don't have any influence over any of those issues, but they can have a big impact on us. So the best that we can do is build our defenses against those international challenges. And one of the main forms of defense is to have an exchange rate that, by and large, is rational and fairly stable. And that is a challenge that we have taken very seriously at the BOJ. And if you notice that in the last, certainly maybe the last 5 years or more, the exchange rate has been fairly stable, moving by maybe 1.5 to 2.5% per year. And that has been a major defense against increased costs coming across our borders and the exchange rate being very high. That would feed very much into a high inflation environment in Jamaica.
I'm glad you brought up the exchange rate, which is another one of the BOJ's purviews. It, even though you say that it's been relatively stable over the past 5 years, we did pass that psychological barrier of 160 to 1. We're not
Yes.
161, 50 something. What
Yes.
is causing the dollar to move primarily in that direction?
Well, demand for the dollar increases when business picks up because a lot of imports feed into business growth. So that is one. There are seasonalities involved in the exchange rate. You have when tourism is high and earnings are good. There are periods when remittances are not as strong as before. So there's a seasonality involved also. But we have inflation, generally speaking, that is a little higher than in the US when you look on it over many years. And so that inflation difference is what feeds into our devaluation. So normally, the US has inflation of about, let's say, 2 to 2.5%. And Jamaica has inflation somewhere up in the 4 to 6%. And so that difference between, say, 2.5 and 4.5, that 2%, is the devaluation that occurred so that we stay fairly level and competitive with the United States.
Is it also that we're not exporting enough, Governor?
Well, we can always export more, but remember in Jamaica's case, most of our exports, so to speak, consist of services that we sell.
Tourism.
Yes, tourism in particular. Remittances are a giant net contributor to our reserves, and that is highly important to us also.
But I feel like we also need to increase the level of goods that we export. And I note that we have this issue with the United States and the tariffs now, and Jamaica has suspended exporting or sending packages from Jamaica to the United States, which has significantly impacted our local manufacturers who do export. Like, how significant of a factor is that particular issue?
Well, exports of manufactured goods, apart from petroleum products, is not very large in the Jamaican economy. But that's not to say that, we don't appreciate the contribution that they make, and that if they were able to make more of a contribution, we'd certainly welcome it. But the fact is that manufacturing exports as a component of total exports is pretty small, and very small in respect of total foreign exchange that is earned. A lot of our manufactured exports consist of the re-export of oil. So we bring in heavy fuel oil, refine it for gasoline, and what's left back we re-export, and that contributes significantly to our manufacturing exports.
So coming back to the issue about the exchange rates, the BOJ has intervened multiple times in the past year, in the past couple of years, in fact, to keep the exchange rate fairly stable. You've injected hundreds of millions of US dollars into the economy, which prompted the IMF to issue I don't remember if it was a statement or where they said it, that perhaps the BOJ should cut back on the level of interventions that you make. Is that something that you would consider? Like, to what extent do you listen to that sort of advice?
Yeah, so the way in which the foreign exchange market works is that every day when foreign exchange is traded, the Bank of Jamaica buys a certain amount, depending on whether you are a deposit-taking institution, a commercial bank, or you are a foreign exchange dealer, cambio. So depending on what you are, we always buy a certain percent, whether it's 20, 10, 15. So that way we are constantly buying, so that when we sell into the market, we're not selling our reserves as such, because we have already bought from the market every day. Indeed, when you look at the last 12 months, you will see that apart from what we have sold into the market, in addition, we have bought nearly $1 billion and put that in reserves. So although we are selling into the market, let's say every month or every 2 months, we are also buying every day. Why are we selling into the market? Because we're trying to keep the market rational. There are times in the market when you may have a big demand. Let's say, for example, that Petrojam has a bill to pay, and that bill is 5 million, 12 million. Or you might have an institution that has dividends to pay, and that dividend amount is 7 million. If we allow that to make the market spike, then it may disrupt the rational thinking in the market. So we enter on those days and we sell into the market to just take some of the volatility out of it. So market will go up and down each day. That's not necessarily our concern, but when it gets a little too volatile, a little irrational, or when there are particular peaks of demand, that's when we enter. But net, every year we are adding to the reserves, which means we are buying much more than we're selling into the market.
So you don't agree that we should just let the market decide?
Oh, yes. So the IMF would like to see us take less each day and allow the market to self-fund. I don't have an objection to that in concept, but I think that Jamaica needs to get to that place carefully. I trust the Bank of Jamaica to make rational interventions when it is needed, more so than I trust the market as a whole to do that. So in the future, as we grow more mature, as our reserves get even bigger than they are today, which by the way is 6.2 billion US dollars, as we get more confidence in the market and we are more rational in how we trade in the market, I think we can reduce our take and let the market self-fund.
Let me take a few questions and comments from the audience. Tavares says, high interest rates are damaging business, and worse, the banks are still not adjusting their rates. And a follow-up on that, Mr. Squeaky says, please ask why the banks won't drop their interest rates, even though the BOJ has reduced their own numerous times.
Yes, well, the banks offer to us reasons why. They say that their costs are high, and in order to get a return on their capital, they cannot afford to bring the rates down. Some banks say that many loans, their rates were not adjusted upwards because they were fixed rates, and so they can't come down. They didn't go up, so they can't come down. So these are some of the reasons why the banks feel that they, at this time, can't reduce rates. What we have seen is, in some instances, small reductions, but nothing terribly significant. And we expect that as we trim our rates going forward, that they will bring their rates down somewhat more.
I don't know if that's an expectation that we can take seriously, because I still remember when the BOJ interest rates were as low as 0.5%, and I still didn't see any rates on the market less than probably 6.5 being the lowest you could find anywhere.
Right. So the cost of doing business in Jamaica for the banks is pretty big. They pay a lot of taxes, more so than many other businesses. They also have heavy overheads that, in a small economy, is not easy to amortize and spread. So I don't think you'll find them as efficient as, say, banks in the US are, but nonetheless, I think that they can improve on that spread between their cost of capital, cost of funds, and the rates that they are lending at.
I agree. Roswell says, if foreign exchange comes in low in Jamaica, how well would the BOJ net reserves help to cushion the economy in the downside of such unforeseen situation?
Yes, if we had a situation where, for some unfortunate reason, remittances stalled or tourism fell off, our reserves would be very, very important for the country. And having it at 6.2 billion is a significant cushion and a major contributor to stability generally in the economy.
Next question comes from Sheldon, who wants to know, will the FX rate go back to 130?
I doubt that.
Doubt that very much
too. Unless, of course, we find oil or some other bonanza hits us and we're flooded with US dollars.
Wouldn't that be nice? Lanesra says, how do you determine the price you buy at, which can also increase the exchange rate?
The price that we buy at is determined by the market. So whatever the average buying rate is going in the market, that's what we are buying at.
This one is a comment. I don't know if you can comment on this. It's a political matter. Rob says asset tax needs to be removed.
The banks have felt so strongly, but that's not a decision for us. That's a decision for the Ministry of Finance.
Jovan says that isn't a fair expectation. Our discussion earlier about the banks being expected to lower interest rates in line with what the BOJ does. He says the banks are stifling the economy. Perhaps BOJ needs to encourage them to lower the rates.
We have done a lot of encouraging, Kalila. I mean, every time we have a meeting, every time we have a public presentation, we encourage it. So I think when you look at the profitability of the banks, it's not as if they are making a killing. They are making a decent return on their capital in most instances. But it's not as if they are gouging the customer for the profits of the shareholders. So I think it's fair to say that they are at or near their capacity, and something else needs to give to get them to bring rates down. Maybe when we bring our rates down more dramatically, or maybe when the taxes that they have to fund, maybe when that is adjusted, it can help them bring rates down too.
Earl wants to know if the BOJ keeps gold as reserve.
No, we don't keep gold. We are principally US dollars and some SDRs, which are IMF currencies that we hold.
As I mentioned, gold, it makes me wonder makes me think about other asset classes such as cryptocurrency. And
Correct.
also it reminds me of JamDex. So where are we with JamDex?
I'm sorry that you're making a connection between crypto and JamDex, two
I know
different.
it's not the same, but it just led me down a train of thought.
Yes, right. So JamDex is up and running technically, meaning for the last 2 years, we've had transactions happening between phone to phone. So person to person, that transaction can happen. The problem is a lot of transactions for persons like you and I and everybody else happens at businesses that use POS machines, so
Right.
debit card, credit card machines. Those need to be reconfigured to take the QR code of JamDex. And we have been working with the banks to have that adjustment made to their POS machines. So we're currently working with them on that, encouraging them, pushing them to make that adjustment, even going so far as to say we will help to pay to get that adjustment made. So we're hopeful that we'll make a breakthrough with them shortly.
But do they seem amenable to doing it? Because I feel like the banks don't really have an incentive to help JamDex flourish because they're not making any money off of it.
Well, they will make something. That's a decision we have made. But you have a point that it's not a big money maker for them, except to say a lot of the challenges that the banks have has to do with cash at ATMs, cash over the counters, moving cash around, protecting cash, you know, and that is what JamDex will help to address by reducing the demand for cash in the economy. So if we were like it is in India, where that system is so pervasive, we would find that there's a whole lot less cash demand in the economy, less complaints about ATM machines, businesses paying less money to secure cash, to move cash. So in the long run, JamDex has a real benefit for banks, for businesses, and for individuals.
What you said, well, that is an incentive. Yes, it reduces cash, and we all know how expensive it is to transport cash. We all remember a couple of years ago all the security issues when it comes to the transport of cash as well. But that financial incentive, you said just now that you have made a decision that the banks will financially benefit. What is that decision? How would they benefit? Would they be able to charge like a transaction fee on
Yes,
JamDex?
a small transaction fee would be allowed.
How small is small?
I don't know the details of that. I don't even know that we have finalized that with the banks, but there will be a transaction cost that's involved.
Okay. And that's a pretty big departure from what
Thank
the
you. Yes.
original decision was.
Right. It's Bank of Jamaica reaching out and trying to bridge the gap between where the banks are and what we'd like them to do with JamDex.
Yeah, I can see why you would have made that decision, although the objective was for it to be pretty much like cash and you don't pay a
Exactly.
transaction fee when I give you cash. But I can understand in order to try to get the banks on board why they would be allowed that transaction fee. So I look forward to when you make that announcement and seeing further adoption of the technology. Thank you so much for joining us, Governor Biles. Much
My
appreciated.
pleasure. Thank you very much, Khalida. Pleasure was all mine.